Good evening, all. It's Monday night, Martin Luther King Day. Hope you enjoyed your day off. We are back into the market. There's some stuff going on out there that's very important. Looks like the U.S. caught a cold, and when the U.S. catches a cold, the whole world catches pneumonia. When we sneeze, the rest of the world catches a cold. And what happened right now is that the fact that the U.S. the U.S. economy is weakening, and we're going into recession and so on. Looks like the rest of the world is catching up, or at least suffering from it. So I'm looking at the futures tonight, and I don't know if you've seen them yet or not, but it's a pretty sad picture. S&P 500 futures are down 59 points right now. The NASDAQ 100 futures are down 76. Down 76 means we are down around here. We're going to open up around this level tomorrow. Quite a bit down. Remember, I talked about this double top over here, and I talked about how we penetrate the 2,000 support, and we're going to go down. I didn't think it was going to go down this much, but this is quite significant. S&P 500 closed at 1325. That means tomorrow we're going to open up around the 1560. I'm sorry, the 1260. Let me change the format on this chart. 1260 is going to be somewhere around here. Now, this is just an estimate based on overnight futures. It's never really accurate, but it gives you a pretty good picture. They say that the Dow is probably going to open down 600 points tomorrow. What happened basically is, our market was closed today, but the rest of the markets were open. The rest of the world was open, and they went for a dive, basically on fears that U.S. economy is going to drag them down. Remember, we are the largest consumer in the world for just about anything out there. The good news for the U.S. market is that, like I said, when we catch a cold, they catch a pneumonia. Therefore, our U.S. dollar is actually strengthening. U.S. dollar overnight is trying to come up just a little bit. Notice that we do have a higher bottom on the U.S. dollar. This is the U.S. dollar chart. And we're coming back up. Basic materials are coming back down. So I do think that things are looking up. What I mean by that is that there's a certain sense of panic right now. Whenever you see a sense of panic, that's usually when things are good. When you go down the street and everybody says, buy real estate because I'm a real estate investor and I'm making so much money in real estate and I'm buying real estate and it's great, make sure that you put your real estate up for sale in a hurry because it's about to go down. Whenever you walk down the street and people tell you about how much money they're losing in the stock market and how they think that the sky is falling, that's basically the time to buy. That's more of an investor attitude, and we are traders. So back to trading a little bit. The market's gapping down tomorrow, and it's gapping down quite a bit. There are three possibilities tomorrow. It's possible that the market will gap down and then keep going down. It's possible that the market will gap down and then go straight back up, and that's what I was talking about before about the bounce back, about panic being the last leg of the downtrend. And then there's possibility the market will gap down and then go sideways. There's also the possibility that the Feds are going to step in tomorrow and they're going to drop rates by about 3/4 of a point or more, maybe even a full point. Who knows? All of a sudden, there's a certain sense of urgency to save the U.S. market, save the economy from recession. I think that urgency should have been there 6 months ago. And if you've been getting this newsletter for quite a while, you know that I've been talking about this for past 6 months to a year. So I think they were late. I think now they are scrambling, and I think they are going about it the wrong way. I think they're involving way too much ego in the way they're scrambling for it. But I think eventually they'll solve the problem. I do have much faith in the U.S. economy, and I do think we're going to come back with a war. So that's about it. As far as the trading itself is concerned, 2 weeks ago, around the turn of the year, I talked about the S&P 500. I talked about the wedge-shaped consolidation. I said that the way for you to take advantage of that is going to be through spider puts on the spiders. I hope some of you have listened to me. If you've done below this level, the 143, you have 11 points on the spiders on options, that would have been quite nice. I spoke to a friend of mine a couple of days ago, and he lost about 20% of his portfolio over the last month, and I don't think he knows about the gap down tomorrow yet. But he's going to lose a lot more. And it's really too bad, because if you are a trader, not just holding your portfolio, if you're actually trading your portfolio, if you're actually actively managing your portfolio, you could have actually made a ton of money when the market itself went for a dive by buying puts on the spiders, by shorting the spiders, the diamonds, the Qs, or by going short on stocks. These are some of the trades that we've done over the past 2 weeks. FTO short at 40.28 went all the way down to 32, and these are without tomorrow's prices. They're probably going to go down even more. Luke 46.83 down to 42. PENN from 58 down to 50. Dry ships from 66, I think it was, down to the $48 level. Cena from the 42.65 down to the 36.98. TIFF from 40.68 all the way down to 32. PCU from 96 down to the 81 level. RRI from 23.81, we got it all the way down to 20.66. Now, these are not our exit points, but that's how far the stock went, of course. CTRP 52.96, we went all the way down to 45. PWR, we shorted 22.96. It went all the way down to 19.15, which happened to be our target as well. Global 20.86 went all the way down to 18. RDN from 875. From 875 it went down to 575. Figure out the percentage on that. 875 to 575. And last but not least is NTAP that's still working. But we actually had even more stocks than that going into this downtrend, and they worked out extremely well for us, because we were holding them throughout the whole trend and scaling out of them and adding in and scaling out and adding in and scaling out, riding the waves in this downtrend. Now, of course, I'm afraid of the Feds at this point. I'm afraid that the Feds are going to step in and going to save the market, and the market's going to gap up 200 points. But instead it's capping down 600 points, so it's a little bit different. But anyway, my suggestion for tomorrow, if you are holding short, and that's your hope that you're holding short, if the market gaps down and bounces up, I would close your positions, because I think that's basically where the panic comes, the panic factor comes in, and people are panicking, and that's basically the reversal. If we gap down and we keep going down, hang on to it. Ride the trend as much as you can. Be careful of surprises out of the Fed. Be careful out of surprise announcements tomorrow in an effort to save the market. Remember, this is an event that hasn't occurred very often. As a matter of fact, the last time this occurred was 9/11. So it's been quite a while. This is not a normal event that we go through. So I'm playing it very conservative. I want to see how the market reacts to this. If the market keeps going, we're going to stay with our shorts. We have about 15 shorts open, including the spiders, including the spider puts, and so on. So I want to see what happens tomorrow. And I'm pretty excited, actually. I'm sure day trading is going to be very interesting tomorrow as well. We do have the new service. We are taking sign-ups for that, so do participate in that. Anyway, hope you have a great week, and I really, really hope that you are turning into trading more and more, and that you're taking charge of your portfolio, and that you're not trusting other people to do the homework for you, and that you're paying attention, and that you are moving around your positions. And when we say that the market is going to go down and that you should go short, that you are going short, and you're closing the long positions in order not to suffer too much, because a 20% dive in the portfolio is way too much. Obey your stops. And follow the market, and make sure that you're actively managing your money. It is your money. Have a great week. I'll talk to you next week. Take care.